Let's take a look at the S&P 500. Back in December 2016, we have a rate hike of 0.25% with a range of 2250 and 2275. And 2 weeks ago, the bulls managed to break above this range. And in the recent week, the bulls have also managed to stay above this range of 2275 level. However, it was noted that the high of the 2 weeks ago level has not been broken in the recent week. And in the recent week, we also have a long tail, which also indicated that the bears have arrived. Let's have a look at the Dow Jones now. The range of the rate hike previously was 19,500 and 20,000 points. And 2 weeks ago, the bulls have managed to break above the 20,000 level. And in the recent week, the bulls have managed to stay above this 20,000 level. But do also note that the high of the 2 weeks level has not been broken. And the long tail can be seen and have indicated that bears have also arrived. Let's take a look at Nasdaq. The tech bubble zone remains at 4,800 points to 5,000 points. And 1 month ago, the resistance of the 5,000 level has been breached. And in the recent week, the bulls did not manage to break above the previous week's high and still remain to be within the high. And in the recent week as well, there's a long tail that has been seen. It's also highlighted that the bears have also arrived. Next, let's take a look at Russell 2000. The previous support and resistance level remains at 1150 and 1260. Anyway, the resistance zone has been broken. And currently for the last few, I won't say few weeks, maybe probably in the last 8 weeks, the Russell 2000 has been stuck in a channel, while all the indices have created the new highs. Let's have a look at VIX now. Back in July 2015, we have low readings, and we have an August market crash back in 2015. And in 2016, in August 2016, we have a September market drop. Now in January to February 2017, we have extreme low readings in VIX. Even in the recent week in February, we have the VIX at 10.97. It's at the extreme low as well. So the market will continue to give surprises. Please be careful for the longs. Next, let's take a look at the treasury bonds and see how is it moving. Back in 2015, the $120 served as a very good support for the bonds, and it has managed to have a rally of more than 6 months. And now it has touched on the $120 level again. And in the recent 2 weeks, it remains below the $120 level. If the bulls wants to make the bonds higher, they need to close above the $120 level and remain above it. Let's take a look at the Japanese yen. The $80 and the $82 level remain to be the strong support for the yen. And back in early 2016, we have a break above the resistance level of $82 level. And the bulls managed to rally the yen for the next 6 to 8 months. And coming to the end of 2016, it has touched base with the $82 level again, and it has bounced. And currently, in the last few weeks, the Japanese yen has stayed above the $82 level. As long as the bull stays above the $82 level, it will remain to be bullish. Let's take a look at the US dollar. The $100 level remains as a very strong support and resistance level for the US dollar. Back in early 2016, it got resisted at the $100 level and it plunged all the way down. And in late 2016, it managed to climb above the $100 level. And in the recent week, it has crossed below the $100 level. This is bad for the bulls. And closing below the $100 level may create havoc for the bulls and may plunge them all the way down to a $96 level. In order to prevent that, the bulls needs to break above the $100 in the next 1 to 2 weeks.